I look at the rate of change, over the course on long-term rate of change, 90, 100 days, 150 days is a big weighting in our signal, as well as, defensives kind of outperforming your, utility signal. We have a kind of a variation of that when you see this kind of defensives start to outperform. That's usually an early indicator, as you like to say, is that volatility is about to increase.
This is Michael Guyot here at the NASDAQ, celebrating the Granite Checkers Yield Boost Fund Family launch, TSYY, on the Tesla end of things. We're doing a series of these interviews with various advisors who are well-known in the industry, who have really interesting thoughts on markets. And I've got here my friend, Mr. Kurt Altrichter, who I've gotten to know over the last 3-4 years. What I love about you, Kurt, is that when you take a bet, you take a bet. I know you'd like to trade some of the levered funds, which a lot of advisors are maybe a little bit nervous about, but you have control and strict risk management around that. Let's talk about some of your model portfolios. I think you mentioned to me the other day you had some spectacular returns using some of these levered funds. Talk about how you think about levered funds in your portfolios.
So, the way that I look at it in our momentum strategy is, we'll kind of take the context back is, for the last couple of years, since 2021 or so, the market's overbought. And everyone keeps saying that there's way too much risk, there's way too much concentration. Well, in my opinion, a market that continues to go up and that stays overbought is about as bullish as it gets. Sure. So I want to be highly concentrated in the things that are working today. So like the tech and, even broad market exposure at 2x or 3x leverage. And then we're very quick to take it off when our signal flips red.
Let's talk about that. So what are some of the signals that help you to get out quickly? Because as you know, these things can be very volatile.
Mm-hmm. I look at the rate of change. Over the course on long-term rate of change, 90, 100 days, 150 days is a big weighting in our signal, as well as, defensives kind of outperforming your, utility signal. We have a kind of a variation of that when you see this kind of defensives start to outperform. That's usually an early indicator, as you like to say, is that volatility is about to increase. And then kind of mesh that over with the VIX. Seeing, like the VIX looks like it's a ball underwater right now. So that's just kind of a preemptive, hey, I'm going to start trimming. I'm going to start just locking in some gains right now. But I don't like to be out of the market very often. If I'm out of the market too long, clients are going to start taking a look at what's going on.
Yeah. So we're talking mid-December here. One of the things I like about your content on X is that you'll differentiate between short, midterm, long-term views, right? Intermediate term. From our vantage point, where we are right now, what do you think? Where are we short-term, intermediate term, long-term for markets?
I think as long as the Fed cuts rates today, I think short-term we're going to have a nice rally into year-end. But going into 2025, I think you want to be in anything that can benefit from deregulation. What I kind of hear through different wholesalers and whatnot is, hey, don't bet against the guy who uses the S&P 500 as the benchmark for his presidency. And I don't think it's wrong to think that, but you still look at this market still has about an 80% correlation to 2008. Yeah. You have, not a lot of triggers there where you need to sell right now, but it's definitely getting overbought. But who knows? We could have threaded the needle on the soft landing. It's looking more and more like that. And if he can, as long as he gets the policies correct with the reduced taxes, and tariffs, I think, are going to require a lot of education for the country to kind of get over. But, inflation is going to continue to accelerate. I expect it to continue to accelerate through. I think we're going to hit 3% at least by Q2 next year.
Yeah. Do you think that the inflation narrative is one of the reasons you're seeing such a proliferation of volume trading activity in some of these levered funds, that people feel like this is how they can try and keep pace or outpace?
I think that people are getting impatient with their returns. So just owning, the SPY right now, And so they need to get more and more concentration. So maybe we're gonna look back and say, hey, this is we're at the top of the bubble. And I keep getting emails from ETF issuers, hey, levered this, levered that, levered this. There's got to be some sort of correlation where we're coming out with single stock, levered ETFs. I don't use single stock levered ETFs in portfolios today, but broader market sector exposure. We were in gold and utilities levered until recently, and then kind of moved out of that and then switched to Bitcoin and the NASI.
Let's talk about, since this is the High Conviction podcast, some of your high conviction ideas, maybe some of the more non-traditional high conviction ideas that you're thinking through.
I think emerging markets, I've been bullish on emerging markets for a while.
You and me both. I've had egg on my
and I
face
think
on
at
that.
some point it's going to do it, but I don't think the way to get into emerging markets is the broader market. You don't want to be in like an EM or something like that. I think you want to get concentrated. Argentina looks, just from a macro standpoint, they got accelerating GDP.
Sure.
And also Australia actually doesn't look that bad right now, just from a macro standpoint for going into next year. I think that's non-traditional. That I don't think a lot of people are looking at.
Kurt, for those who want to track more of your thoughts and learn more about your services, where did you point them to?
You can follow me on X, Kurt S. Altrichter. My website's ivoryhill.com, and I also write a Substack newsletter. You can find a link to that on my X profile.
I love the content you put on X. I really am sincere when I say that. This is Michael Guyad here at the NASDAQ on behalf of Granite Shares, celebrating the yield boost launch TSYY Tesla